I'm a CDFA, which is a Certified Divorce Financial Analyst. In this presentation, I want to talk to you about the financial aspects and considerations of a divorce. Again, like I said in a lot of my other videos, with divorces, it's a huge, daunting task. And a lot of the calls that I get are just people in fear. They're unsure where to start. They've called a bunch of places, and a lot of places, they don't really give them transparent answers, full prices, things like that. So this is what I'm trying to do with this channel, is to empower people and encourage people to continue to go through with the divorce with clarity and with dignity. You know, I would say for me, myself, I am a certified divorce financialist, a therapist, also a social worker, along with that. So definitely I got an interesting way of looking at things and looking at life. So let's just get started. The CDFA advantage. So most divorces actually have regrets, right? Most couples. So divorce is primarily a legal process, but the decisions made in a few weeks will shape 20 years of financial life. Most couples and many attorneys aren't equipped to run the math. So, according to our CDFA surveys that have been published, 80% of divorcing women later say they wish they'd understood the finances better before settling. You know, most of the time with the divorces that we've seen, typically the husband is the one that manages the finances. So the women, they don't really know what's going on. So unfortunately, that's something that we see a lot. So 80% is a lot. So $1 million is the typical lifetime cost of a simple 50-50 split that overlooks tax basis, vesting, and growth. 1 in 3 divorce settlements have to be revisited for missed assets, hidden accounts, or tax surprises. This is why it's really important to look into finances. I mean, we'll talk more about the $1 million, how you could miss on something like that later on, but I'll give a quick example. For somebody who doesn't know much, right? If I say, here's a Roth IRA with $100,000, here's a 401k that's worth $100,000. Well, on paper, it would sound fair that, okay, the husband can take the Roth IRA for 100,000 and the wife can take the 401k that's 100,000. What you don't know is, or people tend to overlook in high stress situations, actually during high stress situation, your IQ points, I think, drop like 10 um, due to amygdala activation. Anyways, um, that sounds fair, but since Roth, the contributions to Roth is post-tax, it's actually worth around 20 to 25% more than the 401k. So the 401k actually needs to be 125,000 to be worth equal to the Roth IRA's 100,000 in theory, right? So that's just one little thing that needs to be considered. So what is the CDFA? What do I do? I'm a certified divorce financial analyst, a financial professional with specialized training in short, long-term financial impact. So I model real-world consequences of each settlement options. Again, taxes, cash flow, asset growth, retirement, lifestyle. A lot of things we consider in these calculations. Again, the Roth IRA thing is just a small sample. Some other things is Quadro, liquidation. We'll talk more about that later. Quadro is pretty much being able to look during a divorce, you're actually able to liquidate. Well, the party receiving the 401k can actually liquidate it without penalty. So that's something that we bring up. So the credential is issued by the Institute for Divorce Financial Analysts. It requires exams. The exam pass rate, I believe, is 63, which is one of the lowest in the If you count all of the, if you look it up, it's lower than the CFP, CPA, CFA. That's not to say it's more rigorous or less rigorous. It's just the fact that 63% pass rate is one of the lowest. There's also casework that we need to complete and continuing education we have to complete. So the background, most CDFAs hold prior credentials, CFP, CPA, CFA, or MBA. Financial experience averages 10 plus years before certification. Myself, I've worked at the Department of Treasury for the federal government. I've examined banks, financial analysis on huge banks with billions of assets and liabilities. So, yeah, that's kind of my background. The role of a CFA is to be a neutral party retained, works with attorney, mediator, not replacement for either, just let you know, uh, which fills the financial expertise gap. That's kind of what I do there. I will say right now I'm partnering with a mediator. During this partnership, we're able to lower each other's costs, work some things out. We also partner with a attorney. It's a three-person team right now that we kind of work together on. The mediator is also a social worker and a therapist. So our vision for this is definitely something more, I guess, giving than just profit. Anyway, CFA attorney and financial planner, three distinct roles. Pretty sure you read this by now, but I'll just run through it. Family attorney is legal strategist, draft pensions agreements, protect your rights, argues in court if things are contested, and advises on custody and support law. So they're the ones who gives you the advice, right? CDFA, I cannot give any advice or manage your money long term. The only thing I can do is run your numbers. What I can do is make sure you're not getting hammered on taxes afterwards. Things of that nature is what I'm there for. So I'll examine and analyze the tax implications, value pensions, stock options, businesses. Well, I can't really value fully businesses. We'll discuss that later. But CFP financial planners, so they're the long-term wealth advisor. They're the ones that'll help you manage your money post-divorce. So, with investment, retirement, estate planning, portfolio, things of that nature, especially the higher net worth divorces. So what does a CDFA actually do? So there's six deliverables. There's asset inventory and classification. So looking into marital asset versus separate assets or separate property. And it really depends on the state. We're in Georgia. This is all based off of Georgia stuff, but I'm pretty sure you could probably apply this to other states as well. Settlement scenario modeling, tax impact analysis, pension and retirement valuation, post divorce budget and cash flow, and expert, neutral, or advocate. So just another thing on this before we move on, actually. So the model is the proposals that I will provide, and with the proposals, both parties will then agree to it. Take a look at it. Asset inventory. That's again the what is separate property, who's taking what. Tax impact. So what happens financially if you gave this that pension and retirement valuation if so, somebody's been working somewhere and that has a pension. I'll calculate it and give it a dollar amount now. We do that by, long story short, is a long process, but we do that, and whatever the pension value is, we'll give it to one party. The other party gets the 401k, for example. That's kind of how we work that. But asset division, again, it's not 50-50, right? It's not just 50-50. Equal does not mean equivalent. Just because the face value is something doesn't mean the actual impact on you is the same, right? So two assets with the same sticker price can have different real world value. So this is what I was talking about, with the 401k Roth IRA as a small example. But let's look at this. A $500,000 in home equity, there's ongoing property taxes, maintenance, capital gains tax on future sale above exclusion. The exclusion, I forgot what it is, but it's once you're above that, I mean, you're gonna have to pay a good amount of taxes. If I remember correctly, I believe I want to say 200,000, but I could be wrong. A liquid, again, you can't pay rent with drywall. May require refinancing to remove other spouses. This is a huge thing that people don't understand, right? If the wife, the current wife, if she hasn't had a job for the past 5, 10 years, it's going to be hard for her to refinance, right? And especially if let's say you bought this house when interest rates were low. Let's say the interest rates, let's throw a number, you got it for like 3%, right? You got it during, um, 2020, you got it for 3%. Well, if you want to keep the house, you would need to refinance it to get the husband off of get them off of the home and the equity. Well, what you would have to do is refinance it. And first of all, you're going to refinance at probably double or triple the rate depending on your credit score, maybe quadruple the rate depending on your credit score. Um, so yeah, that's something to consider. That's something people don't really think about. And again, you might not even get approved, and it's just a mess. I mean, we'll look into that with you, but that's just something to consider. Whereas, let's say 500K in 401K, there's pre-tax withdrawal tax as ordinary income, 10% penalty unless you do the quadro. Uh, there's it requires a quadro to divide without tax events. So there's the thing with the quadro, there is going to be it does cost money as well. It really depends on who your brokerage is. They're the one that charges that. So it grows tax deferred. So a dollar today is worth more later. So yeah, you look at 500,000 in home equity, $500,000 in cash, $500,000 in Roth, $500,000 in 401k. What we would do is we'll kind of break it down to where you can really understand what's what and what's more important and what's more valuable to you. If you're struggling to have cash flow, the home equity, the refinancing probably wouldn't be the smartest. Again, if you're struggling with cash flow, 401k probably won't be the smartest. If you're struggling with cash flow, the smartest option would be the cash, right? And you can reinvest that later if you'd like. So yeah, that's kind of what we'll look into. A lot of things that goes into this. I mean, it's a lot, right? So marital home, again, what we were talking about earlier. If one spouse keeps it, you need to refinance it to remove the other from the mortgage. Must qualify a loan. Again, if you haven't had a job for 5, 10 years, that's going to be something. Again, insurance, repairs, all that adds up, right? Sell and split. This is the cleanest financial split, the cleanest, the easiest. Both spouses start fresh with liquid capital. You can capital gains exclusion 500,000 joints. So yeah, it's 250, I believe, individually of what's it called, growth that you don't have to pay for on tax or yeah, whatever. Um, so yeah, and this is only if it's sold before divorce is final. The reason for that is there's like a for joint couples, it's 500K individually, it's 250. That's something to know. Deferred sale, keep the house until kids finish school, then sell, preserve stability for children, but delays both spouses' next chapter and locks out one spouse's equity for years. So, you know, it does, it's a lot that goes into that as well. So here are some of the traps, right? So even if you don't go with me, I just want to put this out there, right? This is the tax trap. Let's take a look. Alimony is no longer deductible. So there's that. Capital gains on the home is 250 per person or 500 together. Timing can forfeit part of it. So let's say you want to wait a few years. You're not going to be able to get the 500K exclusion, right? So you're going to have to pay um, capital gains on that. So let's just say instead of, let's just say if you sell it now, you can exclude all property capital gains, whereas you wait a few years, you're gonna have to pay 250,000 worth of capital gains. So just keeping that in mind. Filing status mid-divorce. So your status on December 31st controls the whole year, joint versus separate. That's something to consider. So if you divorce December 31st, that means for that year you have to file as single, I believe. Double check with a CPA and tax accountant, but I'm about 80% sure that's the case. And that can swing a bill by five figures. So just keeping that in mind, we actually say that January, February is divorce season because of this. People wait until the end. So retirement needs Quadro. Again, splitting a 401k or pension without a Quadro triggers taxes and early withdrawal penalty. So you can't just transfer it or else you'll get taxed on it, right? Yeah, so a Quadro definitely needs to be looked at and drafted. Dependency credit, child tax credit, dependent care, head of household, all require a clear written plan. Wrong time transfer, incident to divorce to tax free. Sorry, but only inside a narrow post decree window, right? Retirement, we can kind of look through this together. I'm not going to run down all of it, but 401k, there's pensions, IRA, stock options, things like that. A lot that goes into it. Cash flow, can you actually afford it? This is the issue that a lot of people have. They think they have more money than they actually do, unfortunately. If you're only running on a surplus of 1,000 every month as a family, adding another home on top of that or adding a separate home, it's not going to work. I mean, you're going to have to get the money somewhere. Somebody's going to have to start working. Something's going to have to happen, right? So this is the hidden cost and, the CDFA exercise. So it's kind of what we would do there. Budget, cash flow, stress test settlement, identify breakpoints. So red flags. So hidden assets and dirty math. Let's take a look at this. So sudden business downturn. Revenue conveniently dips the year of filing. So there's definitely things that forensics could be beneficial in. Again, with collaborative divorces, we're hoping that or we require good faith from both parties. A lot of these are bad faith, right? So collaborative divorces we might not take a look into, but this is just for your information, your education. Delayed bonuses, so they work for a place or they work for their family. They can delay bonuses or withhold, money to give as a bonus later on. So yeah, there's loans, cryptocurrency, unexplained cash withdrawals, overpayment to the IRS. So, when to bring a CDFA into your divorce, right? Before filing, you want to understand your asset picture, identify gaps, and know what's actually fair. During mediation, model every proposal before signing stress test agreements. So, that's the video. I would like to say thank you for watching to the end. Here I'm just here for financial education. If there's any more questions you have, please just leave it in the comments. If you like the video, if you learned anything, please like it and subscribe. Let's help more people with divorces. It's not an easy time, so let's just do what we can as people to really help the people who are going through some stuff. All right. So again, hope you have a great day. Thank you.